All right, good afternoon, everyone. This is Rose with Brooks Price Action Team. I'm going to do the quick end of day review, which I didn't do yesterday. I was just so tired and it was a long afternoon. I was streaming and I completely forgotten to hit the record button to do the review. But I'm thinking of extracting these end of day review and some of training session that I did, how to enter, how to find targets. It was a long session, so I'm thinking it was also the Q&A session, so I'm thinking I can capture that and post it. And you'll see it as Thursday's end of day, but it'll be probably posted either late tonight or tomorrow. So I'm gonna do is a little bit of yesterday and then of course today. Yesterday we were very bearish. Major sell-off started. Is too high to buy for bulls. Okay, and market came down with three legs. So you have a wedge bottom, bar 4, bar 8, and bar 20 low or 19. Then you have an outside up bar, pretty strong bull bar. That is your cue to exit out of your shorts. The gap to the bar 81, the close of prior day, is still open. So bulls are looking to get back up to the last third leg starting point, bar 12. And they did that. So here's a leg 1, pull back leg 2, pull back leg 3. They even tested the second leg starting point, but it's major resistance here. You got the first sell, you got the second sell. Bears are still trying to sell. That's two-legged move down, so we're probably going to test the bar 28 low, and that's what we did. It came down a little bit more. It's looking for the breakout test area. I'm going to talk about on that is video that I'm going to be posting from the Brooks Price Action Trade Room end of the session, the Q&A session, is how I actually find small risk to enter at a breakout test area. So just look for that. But anyway, so we go back up and we have a double top here. We have one, two, actually three, maybe a wedge top, and or one, two, three, top right there, or one double top lower high. Bears are seeing a bear flag here. Surprise bear bar, so the bulls gave up there. There's a tight trading range right here, and is or triangle, whatever you call it. I call it trading range. I'm counting a bunch of legs and waited for bears to get their third leg here, leg 1, leg 2, leg 3, and the bulls leg 1, leg 2, leg 3. So now I'm looking for who's going to stay below or above the trading range midpoint. Bulls could not hold the price above the midpoint of this trading range right here. Okay, so that's your midpoint. They failed, so you get a surprise bear bar. I had a hard time selling this bar. I was trying to explain people that do not buy here because we might go underneath this midpoint. And then this happened way too quick. I just couldn't find the time to hit the market sell. So I waited for the close and I sold the close and I said, this is a trading range day, so I'm going to take a profit right there. So entered late, but high probability. Even though my stop is up here, I'm probably going to vacuum down to the low. And we did, and in the meantime, we have three legs down. We have a double bottom now, micro wedge double bottom. Second entry long right there. That's beautiful entry for bulls. Is I have entered there and I looked for 10 bars, two legs to moving average. But the one thing that one thing that the bulls fail to do is to get above the moving average. A very strong sell. And if this is a trading range, then why aren't the bulls closing the gap bars? And that's a problem. So I'm looking at the first sell and a second sell. That's a double top low to bear flag. So the bears are selling right there. And then the rest of the day they sold quick pullback. The 1 hour EMA held the price, so it acted as is support. Today is we opened up yesterday's trading range, sort of at the highs, but you could see that bar 37 is a breakout test. We even tried to get back up to 48 low, but we failed because of this gap, which presents a major resistance right there. So we sell, we come back down to this tight balance zone. where markets spent a lot of time yesterday, and then bears failed to sell. We could not close below this um, low. We could not close below this moving average, which is coming from the higher time frame. So what does that really mean? So the bar one tested there. So this is right here, and then is we have an inside bar. So I told everyone, look, I'm looking for lower prices, but if the market is not going to sell due to this trading range low test, I would understand that. Then that would be the second and the third leg fail for bear. So leg one, leg two, leg three, right? So we need three more legs for bulls, maybe leg one, I don't know, leg two, leg three, I don't know. But I'm not counting for the bulls at that time. I'm looking at to see if we're going to get an inside bull bar and can I buy above that bar. And bar two ends up becoming an inside bull bar. It's low. It's at the same level as bar one low. So that's an inside, and the bar closed phenomenally strong. So I'm thinking, okay, they're gonna buy above this, and but I'm do nothing at this point. Now I could have bought that, and I could have taken profits at the midpoint or higher, but I'm expecting these bears stuck down here wanting to sell at the high. So I told everyone, if you are buying, you are now stuck inside the bar one range, and the bears are waiting at the midpoint and at the upper third of bar one, eagerly wanting to sell. So if the bulls are exploiting these strong bear closes like bar one and betting against the market, is then bears will do the same thing with strong bull closes and bet against the bull bar. So that means you're in a limit order market. Okay, so you have to bet against the market. That means you're scalping. That means you are not swing trading. So you have very limited time to scalp. It used to be 2 points, but now ATR today was pretty high. So let me see, it was around, yeah, almost 8 points. So you have about a 4 point scalp, and or you can hold it for 7 or 8 points. And the market did sell, but what do the machines do best? They keep repeating the same thing they do until they no longer can repeat. So you are stuck inside the bar one range, and now the bulls are buying. So you got a leg one for bulls, leg two for bulls, leg one for bears, leg two for bears, leg three for bears. You can see that we are clearly in a trading range. So now the bulls are coming back in. But the one thing that I pointed out during the day, that take a look at the bear bars and take a look at the bull bars. You have one big bull bar and you have multiple, I'm sorry, one big bear bar and you have multiple bull bars. Okay. So bears are not able to get consecutive bear bars and they're not able to get below the moving average. So you have a high one and a high two, and market is keep buying and refusing and rejecting these bear bodies, and they're not allowing bears to close below the moving average. So this is where I decided we're holding the 50% of this trading range. We're stuck in it, bar one range. So I'm going to start buying. So I started to buy. And I bought a little bit here, expected that high to be tested. I scalped out. And then I bought again with bar 14. I scalped up here because we have a resistance. So I told everybody we have a resistance there. So if you want to scalp there, be my guest. We may not break out or get to the high of bar one very quickly. So we come back again, and I see two bear bars, a good bar 17, but you're so close to the moving average, and the bulls have been present at the moving average, so most likely they're there once again or underneath. So failure to break below the moving average with bar 18. I'm looking for bulls again. And the bulls come in, I buy bar 19. Now I could have bought the bar 19 close. I bought one tick above. Somebody asked in the trade room, is if this is a limit order market, why are you buying with a stop order? Shouldn't you be only buying with the limit order? Well, I already done that, okay, here. So I'm already long, and I've already scalped here, so I waited for market to come down. I wanted to see a bull bar closing is on its side, so I could have bought, and I did that. So, but bears have been selling the close of bull bars, right? Is so I figured they might sell or try to sell the 19 close. So that's why I put my buy stop order above it. And at this point, I'm looking for a squeeze out and get a breakout towards the bar one high. So now I'm kind of betting with the stop order market, and we get that. So my stop order filled, bulls closed, and opened a bull bar above the close of 19. So there's a bit of a gap there between the 19 close and 20 open. So that kind of helped me to put one more contract in the market. And then is really good bar. So I bought that, and we're going higher and higher and higher. And then once we got to the high of this part, I started to take profit. But something else that I was seeing there, it's couple of, look at this, double top, double bottom, it double top again is, and then maybe let me see. It was actually here also I was counting. There's double top, double bottom is double top, double bottom. So it's failure of a failure is swing. And then in this session, we have a similar one, right? So in this area, you get a double top, you get a double bottom, you get a double top is another double top maybe, and a double bottom. So there are a lot of failures, right? A lot of reversals. But I'm not getting any consecutive bear bars at the open. I'm getting consecutive bull bars. So I'm seeing, oh, okay, failure of a failure is a swing. I am now expecting market to get to this target and then get to that target. So these are my targets, right? So I'm buying, I'm holding. Even if they actually sell, but look at the sell-off. It's horrible. So it's a one bear bar and then another bull bar. Bear bar, bear bar, bull bar, bear bar. No follow through whatsoever. And then you have actually three bear legs down, and you have bulls right here. We also have a gap here, right? Is if you actually go to the limit, the line chart, we have a gap here, and they actually maintain this gap slightly. So this is bullish, and I see a bull flag with several legs down. So I'm more now excited about buying, and I bought this bar again. So I'm in with several contracts, and I told everyone that I'm going to scalp a little bit at the health R, but I'm going to leave the rest to run to 1R. And the bar 42 actually reached there, immediately took profit. That's a 2 bar reversal, but you have strong bars right here, and leg 1, leg 2, and leg 3 for bulls. And you have the is bear bar. Some bears will sell it because that is such a great bar, but the problem here is that there are a lot of bulls are stuck here, so they're probably not going to let go. So they do buy. You could see the 43 is not a bear bar, so that means they're trying to get back to the 41 high. They got to the 41 high, but the one thing that I'm seeing, should I hold for the high a week or the 2R, or should I exit out of the market? Now, what I saw there was bulls pushed with several legs, leg 1, leg 2, leg 3. And then we're now is making is another embedded leg here, like leg 1, leg 2, leg 3. That's the first sell. I'm looking for a second sell since the bulls are not able to take out the 42 high. So I don't like the bar 45, not a good sell signal bar. I would not be entering with that. 46, okay. They sold underneath 46. That's the second entry short. But give me a break. What kind of bar is this? So that tells me that more bulls are buying and they are in desperate notion of exiting out of the market. Then we get bar 47. Okay, I sold the bar 47, so I'm seeing is double top, is double bottom, maybe double bottom again, another, I mean, there are double tops and double bottoms, and you have two consecutive bear bars, and one of them is right at the midpoint of the trading range, the small trading range. So I started to sell, and so I'm putting my stop around there. I'm looking for 1R, I'm looking for 2R. We go up, I'm disappointed, but then we get two more successful bars. Now I'm going to actually measure those. You can still hold this. You can even measure all the way this area, and then you would look for a 1R. But I measured from here. This was a lot better because then I found a much better two sets of double tops and double bottoms. Here's a double top, here's a double bottom, here's a double top, here's a double bottom, right? And two sets of two sets of double tops and double bottoms, and two consecutive bear bars. I sold underneath 53, entered, and this just vacuumed down so fast. My only problem is that we could not reach the is to our target. So they kind of trapped me there, but immediately I exited out. I did scalp a lot here, but as this was going up, I just exited out. But I was really bummed out. So the market goes up again. So now it's giving you another double bottom, double top, double bottom. It's just bulls are not going to be able to make it. So I'm not getting any bull closes above 42. We are now, I'm seeing another one, two, three. If this was a wedge top, the count may have began here, maybe, or I'm just thinking maybe one, two, three. Maybe the count began here. So one, two, three. So I'm seeing a lot of nested wedges here, and I'm looking for, okay, if the bulls are not going to come in, then bears are going to come in. So here is another two consecutive bear bars. I'm going for 1R, and I'm going to try for 2R again. If I can get the 1R or 1.5, the extension, I'm golden because we're getting closer to the end of the day and the market of course decided to sell, but selling started okay, not so good here. Then we got stuck in the bar 67 range. This is a bear flag. This is really nice, so I actually sold that right there. Is I went for 2R target and I barely got it, but I got it regardless. Is so I generally front run one or two tick before the targets. I don't really hold it all the way, so I tend to get filled before everybody else. And I'm counting several legs there again. Is in fact right here 1, 2, 3 undershoot, overshoot, and in the meantime I'm also seeing um, here the original was right there. You can take this entire, and I told everybody that if we break this trend line, we're going to come down and test the breakout point, the bar one high. This area, this wick is someone here is wicked reverse. The other trend line was from the higher low, 55, is which was right around there. Okay, from yesterday's low there. So we had an overshoot of the trend line, but look, 1, 2, 3. So I'm not selling this anymore. This is not okay because if you're selling, that's the first break of the trend line test. So that means there are buyers waiting there. Most likely they're going to reverse it back up to the moving average. And that's what happened today. So we had all sorts of limit order market, but bulls were showing me high one, high two, high three entries. And then I was seeing bunch of bull flags. This was the perfect bull flag with wedge bottom, higher low. Um, bar 34 was too big. So I don't like it when the bars are too big. I prefer small bars stacking up before buying. That says it's momentum. But when bar 34 is big, it's basically covering, it's a leg in a trading range, is most likely bears will try to sell. If I don't see a second bear bar after the 35, then I'll be inclined to buy. I'm going to look for a good buy signal bar like 37 and I'll go long. I'm going to target the prior high and then I'm going to target these highs, right? You don't need to measure for targets. You can definitely target the prior highs. So is flag actually the second flag? So the first flag, second, maybe the second flag and the third flag, we're kind of extending up the selling, right? I'm sorry, buying. So now we're getting deep pullbacks, okay? When we start to move underneath the moving average with deep pullbacks, even though we snap back, we might be end up buying for the last time, and then the market will start to actually close bear bars below the moving average. So to me, that's what it was signaling. So I kind of was done with that. And here, if you actually say you bought, your stop is there. You should measure from here because bar 56 is a pullback and buy again. That was your 1R right there. So I exited with this bar as I was coming down, didn't get my 2R target for bears, and I immediately bought above bar 56 and I went for that 1R. And then same for bears is two consecutive bear bars, and there's a room to the moving average, so it's okay to sell or sell underneath 60. maybe like a couple of ticks below 60, pullback can fill you. That would be a higher entry, which is much better. You don't want to enter around the moving average. And then is markets start to come down. No two consecutive bear bars, so bears are struggling, but nonetheless, they did close 610, but it's too big. So I'm thinking, well, I want to enter again, but I'm going to put my sell order underneath 65. That's limit, and wait to get filled. And I got filled there, and the market continued to sell down. So very interesting. Yesterday was a super strong bear day, closed down, but I did say we're now in a trading range. Bulls are stuck up there, most likely is so we're probably gonna be an inside day today, and that end up becoming an inside day. So we'll close the doji, but the something that the market is doing here is telling me next week we could continue to buy, and we could have 1 2 3 top, right? Wedge top, 1 2 3 is, look at here, right? So we are inside of this bar, right? Outside inside bar, and we hit the trap zone. We overreached a little bit, and we never touched the target, so we came down. So that's why the bulls are stuck there, so they're gonna buy. One thing that the bulls managed to do, prevented this bar from closing below the mid range. And then the bulls bought, right? So we opened right here, and we came down first, right? And then we went back up and then closed right here. But look where it closed. The entire body is above the threshold. So that means tomorrow, meaning Monday, we can actually try to break out again. And this time we would break is the trap zone. This is the top of the trap zone. And then we would actually reach a target, perhaps make a wedge top, and then come back down. If market wants to sell, we would come back down and test this day's close probably, or the low. But we'll see. I mean, it's not going to be all that easy. If we become bullish on Monday, expect this to be your target at the minimum. We could have get up there, but I doubt it. But we'll see. So I'm at least looking for like a triple top. So what about bears? If we start to sell, then expect market to come down to the mid range and start to close this gap right here and come down and close somewhere around here. Okay, but I think market is still trying to go up. So anyway, it's a very interesting day. Is stop order markets maybe here a little bit, maybe here definitely just a bit, but really all of this was all in all trending, small little ranges trending up, 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 but we did print a lot of gaps. Like there was a gap here, there was a gap here. So it made me believe that we are going higher. And I kept seeing one thing that also signaled me that is we're going to keep going higher and higher. Look at these highs, like draw lines and watch the moving average getting above those lines, right? So when the moving average gets above this high, and then moving average gets above this high, we're bullish. Every pullback, bulls will buy. Look, but the problem was here. We made a high, but the moving average did not go high. So when you actually look at some RSI or stochastics, you're probably going to see a divergence there. When the moving average stays below the prior high, but the market makes a new high, that right there is a bear divergence, saying that the bears are coming in, so get ready. You got a double top neckline. We're probably going to come down and test the neckline, but we failed. So it's not all that bearish, but it did sell for some time. So keep that in mind. That's a good tip, and hopefully you remember for the next time. Okay? You all have a great weekend, and I'll see you guys next week. Bye, everyone.